I'm a winner, but I recognize and respect that I have the potential to lose a lot of money today. That's why I'll make today's number one priority to not lose more than my defined maximum risk. My only job is to manage risk and allow my profits to take care of themselves. The market is irrational and unpredictable. It will go lower than I think and higher than I expect. I recognize this constant unpredictability by staying humble. I respect the market today no matter how good or bad yesterday was. One day can't make me rich, but one day can make me poor. One day at a time.
Take all your money, buy Bitcoin.
You can wake up every morning. Horizontal resistance actually comes all the way across. You've got a support resistance level at about 68, where Bitcoin was holding, broke through, retested. There'll be a level to watch in between. I'll take a look at positioning data. I haven't looked at it since we rolled off all of those shorts that built up into the lows, retraced them back up into 72. I mean, it's the same again. Nothing happening there. Positioning wise, a little bit of a build up of OI on this push down. That's mostly reverted. A lot of that will be hedging flows, probably before the options expiry. And it is notable too that I don't know if a bit of complacency setting in here or not, but well, I don't really know, the feeling of not complacency, the fear will come back. It's the slow bleed, but I don't think that the market is particularly concerned about BTC or paying too much attention to it now. This is the biggest thing that happens when you have these big flushes, is just that people lose interest. So in one way, what had been following the whole way down was the 50 EMA on the 1 hour and the 4 hour bands. And it was holding the 50-50, failed reclaim, then rejects the 50, rejects 50, rejects. And it's back to rejecting again. And it's selling off underneath the 50 just steadily. And even on the higher end, the highest it's gotten to was the 100. And if we put that on I mean, Bitcoin is still just in this steady downtrend all the way and has not had any recoveries as yet. It needs to start confirming above this to really put it into the sideways consolidation like we'd seen here, even for a bearish consolidation. You still want to see it getting above and below and starting to trade. It is still a steady, slow, but persistent sell-off. And from the first bounce, it's just been sold into sold. I'm not overly concerned because I think that even if it goes lower, the volatility has been so high that BTC can go back to 60, can even go into the high 50s. It's still a bottoming zone. We're still in that general area where high time frame, the bottom begins now over the next several months probably. I just don't think you get the V reversal that is always dreamed about. Talked about that yesterday. People need to feel poor for long enough so they capitulate. Time-based capitulation, which is a lot of this. I mentioned the Bitcoin trades wise this week been focused elsewhere because of this, because it had all the nice high volatility. It was probably going to move back into more of this slower grinding state. And that's part of why I think it's better, just gets it over with and drops and actually leaves behind some inefficiency, because this steady, like the way it's moving right now, it's not very tradable. These are not the type of moves that offer much in the way of, certainly not trend continuation. You're not following this as a trend, because it's just moving slow, super slow from 70 down to 65. Compare and contrast that with these nice drops and nice retests and continuation moves and even the reaction rally. So you've got a slower drifting market. If it were to drop sharp, especially leaving behind some inefficiency and then hold up at the lows, people starting to short into it or selling or panicking, that would give some nice opportunities for longs back up, and then we could go into a little bit more of an interesting market for BTC, but doesn't seem to be there yet. Today we have CPI coming in before the New York session. So at 1:30 UTC, we've got CPI, inflation data. That'll be the main pre-market catalyst. And outside of that, looking at yesterday, we got that. I mean, for QQQ, it's what I've been talking about for a few weeks now, you can see the lag effect. You could see everything else outperforming it, tech lagging, and other stuff running. But when it's the tech side lagging and it's all the multi-trillion-dollar companies that are lagging, that's a sign for the broader market of risk off. Growth has gone risk off. That's what this chart tells you. Like the high growth, these hyperscaler, these big AI companies, the big tech, or not AI, but big companies, either off at the moment. With that, this was really just a confirmation of what's been happening since November, really, which is the failures to break out, number one, and for anything to catalyze a move higher, a bigger move. So the main thing to really look at, that I'm looking at, is not the trade of the day, but that's not important. The main thing really is, where are the bullish catalysts? Well, I think that this market was going to roll over, or would have rolled over earlier. Any of you, if you trade tech equities, if you've traded Qs, or if you've watched this for years or whatever, traded Qs, or if you've watched this for years or whatever, you'll have been feeling the pain recently in terms of not price, but the lack of volatility, just not moving. It doesn't usually stop even for this long. Even at tops, even at the top, it was just less than 2 months, and then we had a nice flush. There hasn't been a consolidation like this. I mean, I wouldn't say ever, but there's literally nowhere on this chart I can see it. Like mid-2020, August, but even then, by November, so you had September and October, you had 2 months, and by November you're breaking out. But even that was upward sloping bands. It was one drop, it was one retest, it was one more retest, and away it goes. And that's the longest that it's paused. Because at the top, it was only just over a month and a half. This was more of a corrective pullback. This is a nice, 1, 2, 3 actual pushes lower, so you can reset positioning. This was just one fast drop over 4 weeks, and then it builds back up to new highs, and then you have your few weeks at the highs. But since the end of October, you've had all of November, you've had all of December, you've had all of January, so you have 3 full months, and we're now mid-February, so 3.5 months where it's been in this lower and lower and lower volatility compression, right up until Wednesday, when it finally broke. Before Wednesday, it was squeezing, so you could see price making higher lows and also making lower highs, and then that one push to try to go higher. You see it coming into narrower ranges. Volatility compression like that leads to expansion. But I've said a bunch of times, from all the times I've seen this on any chart, but certainly on equities like SPY or Qs or really anything, when you get these compressions, especially in something that's very heavily owned, like the stock market in general and the indices, which get a lot of passive flows, even though the individual names are showing the weakness, a lot of money just still flows into the index itself. And Google was moving throughout this. Google was still moving higher, so it was helping to prop it up, taking away from some of the weakness of some of the others. These don't tend to break to the upside, but if they do, as I touched on the last few weeks, just wait. You gotta wait. Same as S&P. You gotta just wait. If it's gonna compress volatility and have a nice breakout, just let it break clearly. Like for QQQ, that's gonna be let it break above 645 and hold. And for SPY, it's like let it get to 705, not 700, not 698, obviously. All of these attempts, no breakout. And again, it's compressing. You got to let it properly break out. Like a full breakout above and hold, and then it can start this march higher again that we see, where you can then look at your broader market uptrend. But when you get stalling at the highs, we had a proper sell-off in November. We got multiple lower highs and lower lows for a few weeks. And since then, it's just been holding up. Every sell-off gets hedged. People pile in, hedge short, and then it bounces, hedging. Basically, buying downside protection too soon, allowing it to bounce back up, giving this false sense of strength to the market, where in reality, it's not able to go higher. That's the big thing. It can't break out, which then leaves you with at least in the short term, it leaves you with a pretty expensive market that's overly long and could do with a reset of positioning. It could do with a flush. QQQ's made the move first. It's making lower highs and lower lows now. It's had a break. It's lost the 50. And I think as long as the 50-day EMA is inflected downwards like it is, and it rejected off it on Wednesday, and then we got the drop on Thursday, I think this, but as well as now, of course, since last night, when you close the day like that, when you close the session like that, and it was a big red session for the stock market, now everyone's going to expect it to go lower, of course. So you got to be on the lookout for what comes next. It is in a spot where it should, and it would be, I think, the best thing for it, because even the correction throughout November wasn't enough. I mean, that move from 635, 640 down to 585, multiple pushes, and the multiple pushes are important, right? The drop and the bounces and the bounces and the bounces, because they're dips that get bought too early. That all serves to reset positioning, because in these bullish markets, every dip gets bought, and when it's right, it's really right. And buying the dip pays off over and over and over again. And then you'll buy the dip, and you'll buy the dip, and you'll buy the dip, and you'll buy the, and you'll get flushed out. So those kind of pullbacks are good, because they should serve to reset positioning. They should serve to rebalance the market to where it can go higher. And it's done that. It's tried for both SPY and NASDAQ, where it drops off first, it bounces, so that dip will get bought, comes off the highs, holds the 50, bounce, that'll get bought, gets flushed, bounce again, that'll get bought. And for that, if it makes a new low, would invalidate the last dip buys. And there, anything below 590, anything down towards 590 or below, I can start looking at bottoms, but only when price confirms. It doesn't need to go a lot lower. I wouldn't have any crazy low targets for where price enough pain. And when do buyers actually step in? New buyers. Whoever's been buying throughout this range, clearly not enough to push it to new highs. When does new buyers, when does it drop enough that the cash on the sidelines wants to step back in and really bid across this and across the individual names, especially the big tech names, which is the vast majority of both index, both the S&P and the NASDAQ, get to new highs in 2026. So corrections, pullbacks, flushes, crashes, whatever form they come in, are good for markets. Even if it's like 23 is a really good example, because you want to see these failed rallies, which is just part of a pullback. It drops and it bounces. People buy the dip, and it goes lower, and they sell, and it bounces again. They buy back in, and it goes lower. Then you get a nice impulsive move through, and boom, away we go. That was enough to reset the positioning, to put it back in the favor of the bulls, to keep in something like that. Should, like with air quotes, should happen, but nothing in the markets is guaranteed. But I think yesterday was the closest, the clearest sign we've had so far. We trade a little bit lower, and we see it start to fall back into balance. I haven't looked at the put call ratio in a long time. I don't know if this is still the one that is the most accurate or the best way to look at it. But when this gets really high, it's a sign of a bottom. Basically, in very simple terms, when the put call ratio goes really high, it means there's ratio between puts, which is downside bets, and calls, options, which is bet on the upside. It tends to spike in periods of major sell-off, major panic, fear, whatever you want to call it. And you can see this, like, extremes, like at the end of 2022. You'll see that when you look on some of the dips here at the end of the market, whereas December 22 there, like when we had, it was actually after the bottom, and you saw this pullback into the lows. But that was after the full bear market, a lot of fear, huge amount of puts being put to call ratio really blowing out, and then price fails to follow through, and up it goes. And you can see some of the like even bigger examples, like during COVID, it spikes. I used to look at this a lot, and I can't remember, I feel like something changed with it, and I can't quite remember what, but it used to be, there may be a different measure now, or something may have skewed it. It could be the growth of 0-day options that has done that, but I remember years ago using it as a rough gauge of when you're having downside, which we have now, when you're seeing it sell off, when this spikes, it's typically a sign that we're putting in some kind of a local low, and you can see this pretty reliably. It used to be that when it got above 1 on these spikes, that it was a sign of at least some kind of local bottom, or that price was going to slow. So if you look at like there, the July 31st spikes, market gets bought up again in September. See this, even just that little drop. So this spike in hedging that goes higher. Because typically when puts spike, it's people hedging downside because they don't short or sell. They don't sell their stocks, but they'll buy puts. There spikes as price drops in at the end of 2025 and holds up. So we haven't seen that yet. If there is a spike there, it would be much more of a bottom signal. And it's not like it's not like it's a reliable bottom signal just by itself. It's still price based. But if you do see it blow up and spike out above 1 or higher than it has been previously, and price reacts like it did in the end of December, where it holds the 50 and it stays up, you'll see the market stabilize. And that's where it's at. I mean, narrative wise, there's only one thing left. I think that what's held the market up to this point for QQQ, I do have a feeling that it should be quite a bit lower. And it's been, I think, held up because we're coming into earnings season. So coming into the start of the year, you've got earnings season in January, February, March, but particularly through February and into March. And you had all of the Magnificent Seven, which was all end of January, going into February, where you had all of them except NVIDIA. So you had Apple, Microsoft, Google, Tesla, Amazon, Meta. They all reported earnings across these 2 weeks, and the market reacted negative to all of it. And the only one left is NVIDIA, which isn't until the 25th of February. And I don't know if that's enough for bulls to keep bidding. Is NVIDIA's earnings going to bail the market out? Is it going to be enough to catalyze or kickstart, reignite some momentum? I don't think so. But even if it does, that's 25th of March. 25th of, is it March or February? Am I being a retard? February. Which is still almost 2 weeks away. Just under 2 weeks. So you got all of next week, and then it's in the following week. So there's plenty of room and time for it to drop before that. Maybe NVIDIA earnings, if we go lower, maybe that, if we are lower at that point, could be a low. That could be around the bottom. It was last time. Last NVIDIA earnings was right around the last low, because it reports last out of the majors, and it was
order filled
19th. So it was going into
Order filled. Order filled. Order filled.
Wasted my 2 shots, guys. No, you crashed into a car. And like, no, you were like on your phone, like texting and driving. Yeah,
I don't know how to drive.
that's what I'm saying.
That's kind of weird.
Yeah.
Cause like I was like on my For You page, it was all like that stuff.
Whoa.
Mm-hmm.
Let's not do that. But like you didn't, cause like you crashed into Cody, like
The hell?
my friend.
Oh, like Cody got there.
Because we were following him in his truck, and then you like bumped him, like as a joke. Then he crashed. And I was like, bruh.
You're mad at me.
And you didn't care though. So I was like, what the heck is this girl doing? Times.
You know, she was like telling me about Valentine, how she was gonna give her everything on Valentine.
Really?
She's like, I'm gonna buy her this, that. I'm like, girl, don't waste your money on that bitch.
Yeah. It's good.
It's good.
Well, that she didn't waste her money.
Oh, like, the hell?
Yeah. Not that.
It's good that she's wasting money on that stupid whore.
No, it's good that she didn't waste her money.
Oh.
Some girls just don't appreciate and don't deserve it. That's why like energy is such a strong thing. So you need to reciprocate energy, right? Yes.
I don't sleep the whole night, like, we have to spend it together.
I'll go swimming and shit.
I don't need you sleeping.
I'll go swimming. I'll go swimming.
Order filled.
Fuck.
Order filled. Order filled.
Fuck. I'm done trading. No, I can't do that.
But
Took another loss.
again?
Yeah, I'm done. No, it's bad trading week. It's over.
Oh, that was fast.
Yeah. It's really upsetting.
Do you trade in the weekend or not?
No.
No? It's
No.
closed?
Yeah. Wow. Holy wow.
I still love you.
4, 1, 2, 3, 4. Well, we're up 7R for the week. Fuck. That was so bad, bruh. I'm really disappointed. Why did I do that, bruh? That was bad.
Oh,
That
my
was
baby.
That was my worst trading day in like 2 weeks.
Oh, my Shayla. Kai,
Hmm.
you're my pokey little bear. So you hate me. Guys, don't talk to your boyfriend at 9 in the morning. I promise you he won't talk to you. He's a busy man with a busy life, with a busy dream. Okay, I'm gonna shut up.
That was I just broke my rules. It's just not good. I have no idea why I would do that. Super disappointed in myself. Wow, man. Can't believe myself, man. I can't believe that. feel sick.
It's just another time.
Yeah.
Not every day. You know.
I'm just upset that I broke my rules. Because I haven't done that in so long.
No,
Broke my rules. So I don't know why I broke them today.
what do you mean? Like, why did you break your rule?
Like, I have rules for myself to follow and I broke them. Which I feel really bad about because I haven't done that in so long.
Mm-hmm.
So I don't know what made me do that today.